what you've been doing and what is the great experience that you can expose today for our listeners?
It's a long story, but anyway, after my academic studies, I started my career in a commercial bank, and I always been interested in the way electronic payments can be performed in a better way, and also the link with the treasury. And then, cutting a long story short, I work a lot for the European Central Bank designing the RTGS system, representing the Italian community in the target working group. And finally, that is always be my interest. When I moved here in the UK, I start working as advisor for, like you said, with Bank of England. And also I did some experience, short experience with solution providers, so vendors. And finally, at the point of my career and my life, considering I'm not young anymore, but still full of energy.
No one will tell that, or will guess that.
Oh,
you're looking good.
That's very kind of you. I thought that I should focus more on the consultancy side. It is where I founded DS Payments, where I'm the CEO and the founder, helping financial institutions and PSP, so payment solution provider, in developing their innovation plan and strategy, not just acquiring a solution that is already pre-built like a black box. Innovation today, considering the speed the industry is going, and then all the intervention coming from the regulators, new need from the customer side require a lot of expertise. So it is where I decided to focus myself. And I have to say that I have a lot of fun, because I have clients that are central banks, financial institutions, but even corporates that with sometime a small steer or maybe a more tactical or long-term strategy, they are making a lot of improvement.
What I really want to bring is the feeling that payments are the blood of the financial system, because depending how fast, easy, and secure we're moving the funds, the more advanced is the payment system of the particular country, or even as tech giants, how Apple is providing payments, etc., etc. So I would like to jump today and discuss with you the details of the payments and innovations in the payments. So how do you feel what we have right now in the payments in 2025? Is it something that can be better and we did all the best, or something that we can do better?
2025 has been a key year for all happen. It is still happening. And we saw, if we think about Europe and the UK, but also in other ecosystem, that the real-time payments, so let's say a real-time transaction, the normality, and somehow also mandatories. But this time is different from the previous one. If you think that the real-time payments is not just a new rail that you are joining, require a lot of innovation, a lot of knowledge. So we are talking about, of course, technology, but let's say a lot of expertise on the typical traditional operative and functional people from the financial institutions. And all of this is not easy to find and put together. So there is an orchestration of expertise. And if you think that real-time payments finally is a combination of prerequisite that happened in the past, starting from the ISO 20022, that migration, that for someone is still transformation. So it means that using old format with the new format, and we know all issues coming from missing data, truncation of data, and misleading information. Then we have typically the real-time, so the legacy system of the financial institution that is moving from batch to real-time. So I think that according to the APC rulebook, a payment should be end-to-end perform or settle in 10 seconds. EBA clearing, that is the biggest automatic clearing house in Europe, is positioning on 4 seconds. Let's say that the trend is that real-time payments should be at least fast like a top-up transaction. So when I use a POS
acquiring process.
Yeah, exactly. If we want really to do using your point in a safe way, so secure payments, and when we think about all checks that need to be done in real time, AML, section screening, accounting, liquidity management, and so on, and on the, let's say, on the customer side. Then on the bank side, there is also the liquidity management that is going to settle payments between banks. So this is a big challenge. And I tell you that not all financial institutions or PSP that are offering real-time payments are at the same level of integration. We know that this one is a game that is working only when you have both sides that are the same level of integration. And so all of this, just to explain what I said at the very beginning, is not a new rail that we are plug and play, but is a new way to bank. And this is where things are becoming challenging and things are changing. So, and last but not least, at the end of the year, considering we are almost in December, we saw in October the VOP, so the verification repay, that is another ingredient that is making the story tricky on the bank side, but of course it helped to make payments in a more secure way for the customer, because I finally reduced the risk that payment is going to the wrong recipient.
And thank you for the analogy. I really like the book from Goldratt, The Aim, which is describing that the group is moving with the slowest moving person. And that kind of gives the feel, when we're talking about real-time payments, we should consider that we should measure not by the successful cases, but the most worst, or even worse, if I can say, cases for moving the funds with the banks. And it's still not there. I really liked that you highlighted the verification of the payment for the beneficiary information, because it will allow us to exclude certain frauds and scams that are really happening. But maybe in this case, to provide to our listeners and visitors the visibility, European system really evolved as a payment infrastructure. And what do you think, what are the ingredients or the triggers that help to evolve this system so well? Because if we compare it with the United States, ACH is definitely losing the game.
Yep.
And we take a look on other regions, they fragmented. So even in the MENA region, there is no cross-border payments, which is working similar to European Union. So what do you think, as you have experience representing Italy, what was the secret sauce or ingredients to make it happen and reach the level that we see right now in SEPA payments and instant debits and instant settlements?
If you see that, you can Google, you can see in the map, at the worldwide level, there are a lot of real-time payments system already up and running at the global level, I was saying. But a few of them are successful. Even the one in Europe is still growing.
Yeah.
So let me say one thing. When the European Payment Council approved the real-time payments in Europe, gave some, let's say, guidances. A guidance coming from the APC for me is like a regulation. It was related to the price. So let's say that they suggest the real-time payments fee should be cheaper than the traditional credit transfer, or should be free. Now, according to what I said before, so the huge investment that payment service provider are still making to make this game working properly, how is possible that payments will be offered to their client for free? So it's clear, and you're right when you mentioned the US schemes that is not really successful. It means that the business model need to change. So where do I get the revenue coming from a huge service that for me as a PSP has been a huge investment? I need to understand my customer. So building services, use cases. I can't do everything. And this is why in my job, I see that my clients are trying to focus in 2-3 use cases.
Yeah.
And the partnership that is fundamental. So it's not a time anymore for a PSP, a traditional financial institution, to do everything in-house and on its own. Mm-hmm. There are a lot of resources and skill that are requirement on the regulatory side and the operational side, on the business side. So what do we see is a transition of the typical payment expert of the bank from the operative and technical skill to the business side. So in other words, you don't see spreadsheet with the number of transaction and next the fee and the potential revenues. But the guy that is in charge of payments need to spend the time with his clients and customers, so it can be corporates, private citizen, biller, and retails, the government, public administration. That is also what we are doing at the Bank of England and the Standard Advisory Panel, to understand where they can create new services, where to create volumes. So finally, you see the client that is happy to pay for the service. That is where the new fresh revenues are coming from, instead of the fees. So the big challenge now is here, and it's more customer-centric. And as I was saying, the payment expert is needed to evolve more on the business side. Not everyone is, first of all, aware. Mm-hmm. Not everyone can do this immediately. And this is why, as I mentioned before, partnership is key. Yeah. Because everyone is going to focus on, there are many fintechs that are growing these days, focusing on a specific subject where they provide the specific, their business. And so the financial institution or the PSP in general can really focus on what is their job, in line with the way that the industry, the payment industry is changing, is evolving itself.
We see the landscape in financial industry like as a competition between banks, payment institutions, and then neobanks or fintechs. And everyone is talking like banks competing against neobanks or even right now stablecoins, those on-ramp, off-ramp. And how do you see from your experience how the banks can bring the value to the customers? Is it purely B2C part? Do they work and should collaborate? Because you mentioned this part as collaboration with the fintechs and other types of the financial institutions rather than banks. Like, what is your suggestion as an expert here?
Yeah, I mean, there are two things that I see here, but I mean, you can open the newspaper every day and you see. So you mentioned the neobank. It's fine. I mean, I think that the majority of us are experiencing a new bank account with a higher interest rate and everything is free. And while the traditional bank is still charging a monthly fee or is not really competitive on the service. So what is the point here? The neobank, and here in the UK is happening with a couple of banks still, but one in particular. So they are increasing the number of the clients every week drastically in a positive way. But they also subject to a high number of fraud. But the fraud that are coming because of these, these people, of course, is going to affect the reputation in all market. Now, fraud is true that are increasing because we are talking about a real-time payment world. So everything is real-time. It's easier to not only steal money, but steal data. That is the most warning thing that can happen these days. So the point is, it's not really, of course, try to avoid fraud, but the protection of the client. That is still what is still missing. So I accept to open an account in a neobank and to get all benefits, but I also would like to have the same protection that today you see on the card side. So where if someone is using my card details, in this case my bank account details, I know that in case of fraud, the bank is protecting me. So I think that is what is still missing there. And the second point is more related to the fact that when the PSD2 came into force, I know that is an old conversation right now when we see the PSD3 probably.
Open finance is coming.
Yeah, I see. I mean, in Q1 2026 will be a reality, but for some extent it's already in place. And many financial institutions didn't realize that PSD2 was giving a lot of opportunity to new payment service provider, not really traditional banks. So they started sort of a silly competition. Instead of think that is what happened maybe 10 years later, it's still happening now, thinking about partnership. So a neobank, a fintech that can really create in a cheaper way and a more advanced way any kind of services can be the front end of the traditional bank that on the other side has all the traditional components that are important that I mentioned before, like AML, session screening, all check need to be done. That for the fintech is a huge investment that is not really necessary if they collaborate with the traditional bank. Payment service directive, that can be the number one, the two, the three that is coming, is great because it's going to elevate the collaboration, and is where I see that is not only the only way to survive, but to create a better environment, to build the trust. Because finally, you can build a better world, but if there is no trust, no one is going to use the service. So I think that is where, so the two elements that are key. So the protection on fraud and also collaboration in order to build trust.
I see that the collaboration is happening. Like if we compare to 8-10 years ago, it was really hard and it was really hard competition against bank, even opening the segregation accounts for neobanks, like MEIs. That was an issue because I don't know if you tried, and we had this with our clients, having an account, segregation account with Barclays, it was the matter of time when it's going to be closed and you will not be functioning according to the requirements of the regulator. But coming to the fraud detection, and I think it's really a hot topic because with the card network, basically there are two modes how we're working with the card. 3D secure, in this case, everything is shifted accountability to the bank issuer because you are checking the 3DS, and then the chargebacks, the accountability of the customer. If there is no 3D secure, you are not checking. Is anything something like that planned for the networks, for the payment networks? Like how we can make sure that when we execute the payments, it's properly checked and authorized, and if not, who is taking the accountability? Because right now it feels like everything is ending up on the customer. Do we have any advances there in terms of protection and fraud detection?
In the real-time payments world, at least in Europe, when the originator, the bank of the originator is releasing the payment, and it starts the countdown that is 10 seconds. And the confirmation on the receiver is not mandatory. And by the way, you pay for the confirmation message. So it means that if I'm sending a payment to someone and in this 10 seconds, I don't receive any message that is going to telling me to stop the payment or the payment has been declined, for me, the payment is gone and it's been successful. Now, you can imagine that there are, in theory, a million payments like this every day, and are happening in real time. I'm not talking about salaries that you receive as a bank in batch, then you receive release in real-time payments, because of course they give you the time and the issuer to check all payments. But I'm talking about one-to-one real-time payments. So if you think about that, it's practically impossible to perform all checks that need to be done, starting from the BOP, starting from and continuing with all other important checks that I mentioned before. Protection is key, first of all, and you mentioned also the 3D. But I mean, be sure that if I'm going to buy a couple of shoes online and using my bank account is a fraud, if it's a fraud, the bank allow me to recall that payment, to cancel the payment. Mm-hmm. If I wasn't the one, so I can receive a notification, but I can see just a statement, so an item in my statement, bank account statement, saying that, Dome, you bought these shoes, but I never bought these shoes. So giving me the time to recall this payment or to cancel this payment. And on the other side, because all of this, we said already before, answering your question, it's practically impossible that a single identity is going to perform all these checks. So you see more and more fintechs that are specialized in checking and with the new technology and performance tests that allow to validate 1,000 payments that are happening in real time. And because in the end, in the real time payments, it's not really understanding what is happening in real time, because it's impossible, but have in place all the monitor that allow you to understand if something can go wrong. I don't know, in terms of a tap that need to be closed. If, for instance, if there is a scam in the network that is releasing a lot of payments against the will of the financial institution that is releasing this payment. So I think that this mechanism is working with the expert, so partnership again, and the only way to offer this service in a more scalable way, with, of course, the intention of create new services, but also to increase the number of the transactions, so volumes. This is where, of course, finally the revenues need to come from.
Right now, there is an initiative with the Vero in the European Union. And in my feeling, like right now, the Europe or this part of the world is trying to compete against the Visa MasterCard. And the reason I think why card networks are successful, because they operate on the different level. Because for opening an account, you even technically don't need to have an application. So you can have an account with the bank, but just come into the branch, opening, and then you have papers and the numbers in some kind of core banking system, but you might not have an application. Do you think it's really possible maybe for European Union to kind of downsize the impact of the card networks? Because I don't have the numbers right now with the statistics, but most of the consumers' transactions are happening through the card networks. We're not talking about in volumes in terms of the money, but in numbers of transactions. I'm paying for the underground, yes. I'm buying the coffee. Is there the way how the payments on the high level or payment institution or regulators thinking, okay, what do we do to make payments more available for the customers? Because it feels like a third leg because you're using Visa, MasterCard.
Let's say that any card scheme, yeah. And but I also think about Ripple, that is not really a typical card scheme. Card schemes are closer user group. So yeah. It means that they are working well. And I recently had the opportunity to follow a symposium from Visa Direct, so outside of the plastic, let's say. That is good, because finally they are offering a network that can be also an alternative to the traditional network offered by SWIFT or others, but it's still a closer user group. So it means that you need to be a participant, so that scheme, to be allowed to send and receive payments between all participants. And I stop here regarding this point, because I don't think that there is anything more to add. But I would like to take your attention to another point, the G20. The G20, now years ago, I think that we were during the COVID time, talk about standardization on cross-border payments and API as well, because it's not only the message itself. And why? All of this has been designed to avoid the user group, closed user group, to avoid to participate in a scheme where I feel that I can reach everyone in the world using the same standards. Then, of course, on let's say this one has been the very high-level directive. Then on top of this, we saw and we see still a lot of initiative coming from the G20 directive, like CBDC, no? Yeah. But CBDC is still like, to be honest, there are plenty of services or a project like this at a global level, but still fragmented. Yeah. So CBDC should be an instrument that allowed banks, institutions to talk to each other and exchange payment based on their local central banks. So central banks are talking to them, but it's not really happening yet. But the direction is that one. Then there are also political reasons, like in the US, where really the CBDC is not seen an opportunity yet. Maybe because Fed now, according to what recently the deputy governor said, the Federal Reserve mentioned that Fed now should be enough right now. But I mean, things are still happening. But so to your point, the future is an open system and not really a card scheme, and where the interoperability is guaranteed.
So you should not be in a closed club to access the payment system and operate within. But it feels like the blockchain network, because I think it makes a lot of buzz right now. And even this year at Stripe sessions, Stripe announced that they acquired the bridge and they built in the stablecoins. Does it feel as an alternative to the current payment schemes that we have in United Kingdom and European Union? Is it a threat? Is it just the marketing? Like, are those stablecoins going to survive in your vision, or they will be integrated with the banks and will exist as an alternative to the card schemes and payment rails?
Yeah, I mean, this one is very funny. I read a lot about stablecoin and again, stablecoin is the infrastructure, and then you build services, no? I was saying it's very funny because everyone is talking, but I don't know how many are aware about what really stablecoin means. We have at least 4 different stablecoins. Of course, the one based on the currency, think about dollars. Okay, so you can build literally a stable market and services on that. But then when we move to other stablecoin, I'm not talking about, for instance, gold, but I'm talking about the one based on algorithm, or others based on virtual entities that, of course, they can change related to the way the market is going. On an algorithm is related to things that really you need the proper artificial intelligence engine to understand what is going on. So stablecoin itself, the one that is progressing a lot, that is also the one that is central banks are perceiving, is the one based on the first two, based on the stable currency, so I think dollars or euro, and the one based on a physical, let's say, good, like gold, other metal, and so on. So I think that this one is a game that we are still building. We saw a lot of people that lost a lot of money, but because it's easier to get money but to lose money, especially when you bet on an algorithm, or you invest you bet on an asset, a virtual asset like Ethereum that I was mentioning before. Require a lot of expertise. The market for sure is going there. No one can ignore anymore. But I believe that so far, that if we talk about cryptocurrency, and then you mentioned before the blockchain, the acquisition that has been made recently in the market, we are not ready to think about the virtual side, the fluctuating one that is to risk, especially if you're running a business.
Maybe in this case, we have some questions that we prepared. Maybe you would like to highlight something to our listeners.
We are approaching the end of 2025. And 2026, the way I see, and based also on the requests that I'm receiving from my clients, and can be Middle East, can be Africa and Europe, is consolidate all has been achieved in this year. I think that 2025, by the way, I forgot to mention that this last week has been the end of the coexistence between MT messages and ISO messages. There is a lot happened. It's a big storm, and now the weather is again quiet. But quiet means that I needed to build the infrastructure and that allow my clients to come and enjoy what I build. So my suggestion is don't panic, because there are many things that need to be done yet, and PSD3 is coming right now. So we are talking about open finance, like you mentioned before. This is another interesting topic.
That's a deep one.
Yeah, I mean, when we build financial services in terms of new use cases, you need to make these financial services available around the clock and in almost in real time. So again, need a lot of it's a challenge and require a lot of expertise. So the idea is 2026 is the year of the consolidation, and that means building trust. It means increasing volumes. It means identifying with the 2-3 use cases that will allow all kind of clients of the several PSP to enjoy the services. And again, trust and again, customer-centric is the key. So this is why I was saying it's important to understand the business of the client from the financial institution perspective. A message from Europe, we will see also new East European countries joining SEPA. And there is still a lot that need to be done on secure payments in terms of AML session screening, because of course there are new entry and the new in terms of the new regulation. And I saw, and I've been a bit surprised, several European countries closing the door on helping small and medium financial institutions in joining SEPA, for instance. That for us is a 35-year-old. And instead of closing the door, I think that it could be interesting, a bit more proactive, to partner with a regulatory expert to cover the gap they have internally, because the reason why they close the door is not because they don't trust the new countries, but because they don't have the resources to dedicate to their local business. So partnership here is key, and giving the opportunity to the emerging, the new entry countries to enjoy the service that the European Union and UK, because the UK is still SEPA, are enjoying for many years.
That's definitely true. And in this case, we are closing the episode. Thank you for highlighting all the topics. It was a pleasure to discuss. And thank you for the quite good overview what is expecting for the next year. I think the question with putting the customer in the center of the business line is really important for the fintechs. It's not because it builds the trust, but I think it helps to evolve and provide better service and evolve the product itself. The better product is, the more happy customer is, that everything works in seamless mode, I would say.